Would you rather know where the real estate market is going or where it's been? Join me today as I show you 4 leading indicators that will give you a glimpse as to where the real estate market is heading now. It's J-Dub, Mr. Downtown Delray with eXp Realty here in Delray Beach, Florida. If this is your first time to my channel, smack that bell, subscribe to my channel so you're notified every time a new video drops. And call me, text me, send me an email, do something. I'm here to chat. Today's video is about the third quarter real estate market here in Delray Beach. It's not a national smorgasbord of data. It's going to be concise. I'm going to be talking about 4 leading indicators that are very important to understand where this market is going for you, whether you're a buyer or a seller. So at the end of the video, I'm going to give you specific action items and ways to look at this data to help you move forward. The amount of information coming from the real estate market is overwhelming. So if you don't know what you're looking for, man, it can be so confusing. So what I like to do is break it down into 2 separate indicators to help. First is the lagging indicators, next are the leading indicators. For lagging indicators, we look at things like the average to median home price. We look at absorption rate, the sold to list ratio, and also the number of listings. That's really good information if you want to look at what happened in the past. For example, if you want to know what the house sold for on your street or nearby, we look at what it sold for. That's an indicator of the past. It lags. That's great, but what's important to you is what's happening in the future of this industry. That's where we look at leading indicators. To look at leading indicators, we look at things like number of new listings, pending listings, number of active listings on the market, and also the days on the market. For example, pending listings are really important. Listings that went pending. That takes a look at how many properties went under contract that are going to be selling and closing in, let's say, 15, 30, 45 days in the future. That's a leading indicator. That's really important for you to understand. Now let's take a look at a series of charts and graphs I put together that will give you an idea of what's going to be happening in the future of the real estate market. And let's take a look at this first Excel sheet that I put together for you, where simply it takes a look at the leading indicators, the active, new, pending listings, and days on the market. And as you can see in the columns up at top, it breaks down, this is just for Delray Beach for the last year. It gives the first column is active listings. A year ago was at 1,434 listings. Today it's at 641. But if you look down that, it's a gradual reduction every month over the last year. But over the last 4 or 5 months, it looks like the numbers are starting to stabilize. So it's not dropping as much as it was late 2020. So that might be a good sign that active listings, we might be seeing some turnaround in an increase over the next, maybe the 4th quarter of this year, going into 1st quarter of next year. Now let's take a look at new listings. It's pretty much flat from about 493 to 421. And there's not a whole lot of change there. And as you look down below under new listings on the horizontal grid, you can see that that is down 21% from last September to this September. But year over year, it's only down about 7%. So that's probably 2 things. It's the post-COVID era, and also sellers are just thinking prices are so high, if I list my property, where am I going to go? We're going to go for an upside for themselves. So right now, sellers are basically saying they're not putting their properties on the market yet. They're waiting for things to settle down just a little bit. The next one is pending, which is just on the horizontal grid there. You can see that September of 2020, there was 439. This September, it was 376 listings pending, which is a 14.5% reduction. But what's more important that I look at is the year over year. So there's a 29% increase in listings pending. To me, what that means is that demand is really high, that buyers are everywhere. There's more contracts going under this year than last year, which makes sense. People are free to travel, kind of a post-COVID thing. But if we look forward, if this number continues to remain positive, that clearly tells us that demand is entrenched. Buyers are gobbled up in the market, which correlates back to the number of active listings. So all these are forward leading indicators as to where the market is going. And then you can also see the continuous days on the market numbers from last year to this year. Basically, it peaked at 90 in December of last year, and it's gradually gotten faster, meaning the lower the number goes, the faster the properties are selling on the market. So as you can see at the very bottom in the yellow column, average days on market is down almost 62%. So the velocity of sales is absolutely on fire. And to see a better visual of this, here comes a couple of charts we're going to take a look at. The first one is for the active and new listings. And as you can see, and as I mentioned to you, the number of new listings is pretty much flatlined over the last year. Again, that basically says that the sellers are not ready to list their properties in the velocity that we would hope. So it's been a flat line until things change where they feel comfortable. They have either an up leg or a down leg to go, or they feel comfortable with maybe the pandemic issues. We'll continue to see this flatlining for the months ahead. But obviously the active listings, you can see, has basically crashed. That was down, I said, 57%. But over the last, since June, July, August, September, that's starting to flatline. So as I look out future, we've already seen the guillotine effect where the numbers have crashed, but now we're seeing listings are stabilizing, and we might see that trend start to change in fourth quarter. But I probably look out in the future and say maybe first quarter of 2022. If we start to see these numbers rise a little bit, then we will start to see the seller focused market easing into more of a normalized situation. And next is the chart on the days of market. Basically just shows you from 97 days or 95 days on the market, crashing down to as you can see there low. This market is just absorbing inventory at a rapid rate. And until we see this start to change, which right now there is no change, clearly the sellers command the market today. So what does this mean to you? Well, if you're a buyer, there's some things to consider here. It clearly shows that this is still a seller's market. The data hasn't changed, hasn't shifted in your favor. I know you don't want to hear this, but we need to look at the facts. And if we look at the leading indicators, we haven't yet seen data to prove or to show us that over the next 3 months, the last quarter of this year, that we're going to see a lot of change. I would anticipate for the remainder of 2021, it's still going to be a seller's market. But this is a good time for you right now. This doesn't mean you can't buy homes. Obviously, I show the data. Homes are selling like crazy and they're selling fast. But for you, what it means is, hey, let's get your finances in order. Get with your lender, get pre-approved right now. When we go to battle, we go into putting in an offer, we need to be creative. Right now, cash buyers are in the market. They're offering more than the listing price, but we can still compete with that. There's things like, the appraisal contingency, the inspection contingency. Well, I've been writing a lot about that in my blog. You can go to MrDowntownDelray, MrDowntownDelray.com, and take a look at some of the articles I've been writing that are specific for you as a buyer. We can waive the inspection contingency. Why? Well, if the average repair that's done from inspection reports is about $5,000 around the country, then it's almost like saying, hey, I'll just get rid of that inspection report just to ease friction with sellers. The more friction that we can ease when we go into putting an offer in a property, the more ability you'll have to win purchasing the property. So we need to be creative. We need to look at new ways. It's not the old way. There's a new norm of ways of doing business today. And I encourage you to take a look at my blog so you're prepared to go into battle. And now I'm talking to you if you are a homeowner or a potential seller. Right now, it's the best time, absolutely the best time in history to be selling your home. All the indicators, lagging and leading indicators, have shown and continue to show that right now is possibly the peak of the market. The days on the market are super low. The active listings are lowest in history. We're talking, 0.5% or 50% down over the last year. So you clearly are in the driver's seat of this marketplace. But we know one thing: leading indicators can change. And if interest rates start to climb a little bit, if active listings, like I showed with the pending listings, and if active listings start to turn from a bottom, the market can change quick. We've seen that happen in 2007 and 8, where all of a sudden prices dropped, everything changed. It changes overnight. So don't wait too long. If you've been thinking about selling, really think hard, because leading indicators are only good for about 90 to 120 days, then they adjust. Right now, you are in that peak moment at the end of 2021 to put your house and property on the market, because buyers are everywhere before it changes. Think about it. I like the leading and lagging indicators, but that doesn't matter. What do you think about those? Let me know. Send me a text, send me an email, pick up the phone, call me. And if you're gonna be local here in Delray Beach, let me know. Coffee is on me. Love to get together with you. That's it for this quarter's real estate market update here in Delray Beach. I'll be back the first week of January, taking a look at what took place in the fourth quarter. In between now and then, I'll be sprinkling in a little bit of market data as things shift, as I see things happen. So be on the lookout either in my weekly e-newsletter, or I might do a little YouTube short here coming soon. But that's about it. I hope you enjoyed this. We'll see you next time.